Most indicators fail the moment you change timeframes. RSI works on the 1 hour, but gives false signals on the 15-minute. Moving averages look great on the daily, but whipsaw you to death on lower timeframes. And that's exactly why you need to see this institutional-grade filter that adapts automatically to any timeframe, giving you the same precision whether you're scalping the 5-minute or swing trading the daily. To add this indicator to your chart, head over to TradingView and pull up any market you want. I'm using the 15-minute timeframe on Euro-Dollar, but this works on any chart, any timeframe. Click on Indicators and search for Kalman VWAP filter. Make sure you select the one by backquant. Now this isn't your regular moving average or VWAP indicator. No, this is much better. Most smoothing techniques force you to choose between lag and smoothness. You get one or the other, never both. But this filter uses Kalman filtering, a recursive Bayesian estimator originally developed for aerospace applications, fused with volume-weighted average price to create something truly special. What makes it work across every time frame is how it rebalances the lag-smoothness trade-off each bar using probabilistic weighting. So when volatility spikes, it adjusts automatically. And when markets consolidate, it also adapts. You get institutional-grade fair value mapping that maintains the same precision, whether you're trading the 1-minute or the monthly chart. This indicator is excellent. But if you're trading at prop firms, here's the problem. Most indicators aren't built for them and often fail from drawdowns. That's why I no longer trade strategies like this manually. Instead, I trade strategies with low drawdowns, high consistency, and years of data, like these, that are specifically built for passing prop firm challenges. And the best part? They're fully automated too. So trades run 24/7 across every market, meaning if you have a job, family, and no time to trade, that's no longer an issue. So if you're serious about passing your next challenge, click the first link in the description. Now, to get the best performance from this indicator, let's get your settings right. Double-click on the indicator to access the settings panel. You'll see price source set to close by default. Keep this for most trading. Next, you'll see process noise, which controls how agile the filter responds to price changes. For swing trading on higher time frames like 4-hour or daily, set this to 0.02. For intraday scalping on 5-minute to 1-hour charts, increase it to 0.08 for faster adaptation. Then adjust measurement noise, which controls smoothness. For normal use across most time frames, set this to 3. But if you want very smooth tracking on daily charts, increase to 6. For volatile intraday trading, drop it to 2. Now for VWAP weight, set this to 0.3 to balance both price movement and volume influence. Finally, set filter order to 5 for reactive short-term filters, or increase to 8 for smoother institutional-style baselines on higher timeframes. Once that's done, click OK. Now let me show you 3 powerful ways to trade this indicator across every time frame. Strategy 1 is trend following with the Kalman VWAP filter as your directional bias. This is the foundation of the system. When price trades above the Kalman VWAP line and the line's slope is positive, you've got confirmed bullish pressure, which means buyers are dominating above fair value. But when price trades below the line with negative slope, you've got bearish pressure, a signal that sellers control below fair value. For long entries, wait for price to pull back to the Kalman VWAP line during an uptrend. You're looking for price to touch or briefly cross below the line, then reject back above with a bullish candle. This rejection shows buyers defending fair value. Then enter long at the next candle open with your stop loss just below the Kalman VWAP and target 1.5 times your risk. For short entries, wait for price to rally up to the Kalman VWAP during a downtrend. When price touches or crosses above the line, then rejects back below with a bearish candle, that's your entry. Enter short at the next candle open, place your stop above the line, and target 1.5 times your risk. Strategy 2 is mean reversion when price diverges too far from fair value. This is where the magic happens. Strong divergence between price and the Kalman VWAP creates high probability reversion setups. So when price extends significantly above the line, institutions view it as overextended, a potential short opportunity back to fair value. And when price drops far below, institutions see undervaluation, a potential long back to equilibrium. Enter in the direction of fair value with tight stops at the extreme. Strategy 3 is the most powerful, fair value equilibrium zone trading. This strategy identifies when price and the Kalman VWAP converge, signaling equilibrium between buyers and sellers. These convergence zones often precede major directional moves because they represent institutional agreement on current value. Watch for price to trade very close to the Kalman VWAP line, within 0.3% for Forex, 0.5% for other markets, while the line slope flattens. This signals equilibrium. Now you're waiting for the breakout direction. When price closes decisively above the line and the slope turns positive, that's your long signal. But when price closes below and slope turns negative, that's your short signal. These equilibrium breakouts offer the best risk-reward ratios, because you're entering right as institutional consensus shifts. Your stop loss sits just on the opposite side of the Kalman VWAP, giving you tight risk, while your target can extend to 2 or even 3 times risk because you're catching the beginning of a new trend leg. Now, just before we get into optimal settings, don't forget you can now join hundreds of traders in our community automating strategies like this on their accounts, which means you no longer have to spend weeks testing and hours behind a screen, all just to potentially blow your account. So click the link in the description to join our community and get the automated strategies today. Now, while this indicator works across all time frames, different markets require specific parameter adjustments for optimal performance. For forex pairs on any time frame, set process noise to 0.03 and measurement noise to 3. Forex has consistent volatility patterns that the filter handles beautifully with these balanced settings. For crypto across all time frames, increase process noise to 0.08 and reduce measurement noise to 2. Crypto's explosive volatility requires much more adaptive settings. For stocks, use process noise of 0.025 and measurement noise of 4 for most time frames. Equities trend more consistently than crypto, but still need moderate adaptation. For gold, set process noise to 0.02 and measurement noise to 5 across all time frames. Gold has unique volatility characteristics that benefit from more smoothing. The filter adapts to gold's sharp moves while filtering out the notorious false breakouts. Thanks for watching, and I'll see you in the next one.